We're live on stream, Mr. Vlad. Welcome, man. How are you?
Hey, good to be here.
Yeah, dude. I'm a fan, man. I appreciate you coming on. The timing is pretty good on this one as well. I feel like you've been on a little bit of a media tour the last couple weeks here.
Yeah. It's funny because some of the stuff was actually scheduled like weeks ago, so the fact that it's happening kind of right after the crazy markets is more of a coincidence, but I think a good coincidence that we can talk through what's going on.
Yeah, the timing is honestly pretty good. So yeah, welcome to the. Okay, do you want to start really quick? I'll give you like a second if you want to give like a quick intro into who you are for people that are not familiar, and then we could dive into some details.
Sure. Yeah, so I'm Vlad, founder CEO of Lighter, which is a perp DEX on top of Ethereum. I guess I'm I'm not a crypto guy who got into finance. I'm more of like a finance guy who took a detour to AI and fintech and then got into crypto. So, and I guess we can talk about all of that if folks are interested. But that's kind of a quick summary.
Hell yeah. I like the way you phrase that. I mean, I have a bunch of stuff for you, and I want to get into some lighter specific stuff. We get into your background a little bit, but I think let's like start with what's most recent and relevant right now. So, I mean, yeah, Friday was I think the craziest day that most people here have ever experienced in crypto. And since Friday, I've had a bunch of traders come on the stream and sort of talk about what they think happened, how they played it, why they think it happened, what we sort of do from here. But I haven't had a founder, particularly one with your like domain knowledge expertise, running lighter, running perp decks, talk about what happened that was directly involved. So can you sort of just set the stage on how and what happened on Friday?
Right. Right. Yeah. So one thing also that's kind of interesting for me was a little bit of deja vu because I was in TradFi, first at Citadel and then at another um, hedge fund during the 2008 crisis, right? And actually, like the most volatile day of 2008 was actually October 10th as well. Um,
Is that true?
so yeah. So the S&P started out the day at 900, went all the way down to 830, and then closed at over 1,000. Um, and so so that was a little bit of a deja vu moment for me, but yeah, so that was 17 years ago
Whoa. I think yeah,
on this on that exact date.
I was 17 years ago on that exact date.
Yeah,
That what's the
yeah.
significance on October
I was
10th?
pretty,
Is
yeah,
it
yeah.
just a coincidence, the October 10th thing?
Well, October is always volatile. Like it's the most volatile month of the year. Like a lot of the big crashes happen in October, like historically. If you look at like the I think the biggest crash um ever in 1987. I mean, that was October. I think a lot of the big moves in 1929 that led to the Great Depression were in October also. Like October is the most volatile month in general. But why the 10th? That's probably coincidence, but but that was definitely deja vu for me. But I think ultimately it all comes down to the same thing, which is like people are over levered. Um, a lot of liquidations happening. It's like right, and it's like this kind of move when it's like down and then up and then that means that people are actually getting liquidated from both sides, the longs and the shorts. Um, and so I can tell you like from where we said what it was looking like because the markets were already pretty choppy kind of all week, right? Like, and we saw that um, just in terms of like activity, there's you know activity was elevated from the TPS that we're observing and all that. So we knew something was kind of weird in the markets. But then and our team is distributed, but I'm on the East Coast in the US, right? So I was looking at this like around like so like there was like a big sell-off 3 to 4,
Uh-huh.
which like I guess some alpha here like actually like this is something that existed for many years, but usually during these volatile days, there's like the sell-off is accelerated in that last hour. That's actually like actually like if you just trade that, that's a sharp two strategy. But that's beside the point, I guess. But then it kept going, right? In crypto, like obviously TradFi closed, but then crypto kept going, and we were looking at it. Okay, like these things happen. I mean, we even since we launched lighter. I mean, there have been some days like I think like February had some volatile days, you know, April some volatile days. It's like, okay, well, we're just want to make sure um, the system works, and we're just addressing customer tickets and all that. And then we saw all of a sudden, like, you know, we're watching our internal market maker that the community can buy called LLP, right? And LLP all of a sudden, like, it was like flat, 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 and then there was actually, it was up 40 basis points, and then 5 minutes later it was down 3%. And our first thought was that this is an attack, right? Because there have been attacks on liquidity providers in the past. Like we had one that was, you know, back in March that we kind of were able to resolve and made everyone whole. And then, you know, like Hyperliquid had that jelly attack. There was the
Uh-huh.
Mango Markets attack from like 22, you know, all this stuff. So our first thought was that there's like a coordinated attack on LLP, because all of a sudden it went from, you know, flat to up a little bit, to like down 3% in 5 minutes. So we were actually really like heads down digging into that, making sure there's no attack. So we were not following. I mean, we saw that the markets were volatile, but again, it's not the first or only volatile day of the year. We were more worried that there's no attack going on. And actually, after like spending an hour investigating, we concluded that there was no attack. Like there was no market manipulation. It's just it's just kind of market moves like deleveraging and other stuff like that. But yeah, so I'm sorry to disappoint. I don't have a very great insight what caused it, because we what like our responsibility is like to our product and our customers. We want to make sure that we were not being hit by an attack at that time.
Could you tell leading up to this that like OI and maybe some other metrics were getting like sort of out of hand and that we were potentially susceptible for a flush like this? Like, was something like this happening on your radar or not really?
Well, it's yeah. I mean, I think actually I wrote a post, like there's an exchange I had with Hasib like a month ago, right, where there's a discussion about like volume versus open interest, and you know, I think like Hasib was talking about how it's like healthy to have you know, if like those need to have to be in a good proportion, and his point was like if there's too much volume and not enough open interest, that's probably like indicative of an unhealthy market, like wash trading and whatnot, right? But my point was that's true, but the other extreme isn't good either, right? If there's too much open interest but not enough volume, what that means is there's some like really big positions just waiting to be unwound, and not much liquidity. So that's like not a good extreme either. And yeah, I mean, I think I not on lighter, but I think on some other platforms maybe the open interest was a bit too high relative to the liquidity. Um, you know, that I think that's probably true, right? Like you actually don't want open interest to be too high either.
Does a and we can move on for Friday in a minute, but I don't know. I'm just curious. Like, do you feel differently about building a perps product after watching like crazy liquidations and people get carried out on a day like Friday? Like, does it change how you feel about the product that you're building? And like, it's, I don't know, its value or its importance
Mm.
to the market?
Right, right. Well, I feel that our mission is actually more important than ever, right? Because our whole premise with Lighter is to build a system that is verifiable, right? The matching is verifiable, the liquidations are verifiable. Like every liquidation that happened on Lighter, we can is cryptographically proven to have been correct and following the rules in our ZK circuits. Now, I think there's certainly things we could have done differently, should have done differently. Like one of those as it relates to liquidations, right? Like we have rules that go into how liquidations work, from kind of partial liquidation to full liquidation to ADL. Those are all in, you know, they're in the docs, right? They're all there. The math is all there, but they're kind of like, you know, they're like at the bottom of like 100-page document, right? So it's like,
Yeah, yeah.
so it's there, and they're all in the code. Like there's no, it's all transparent. But my point is like I think that logic should be communicated more proactively
Mhm.
to traders, right? It's like a lot of people, not just on Lighter, but like I think a lot of people didn't even know what ADL was before Friday.
Yeah.
Like, and that it's not because people were trying to hide. Like, I think every product that has, you know, every perps product needs some form of ADL. And I think everyone, you know, like had that in the docs. It's not like, you know, it's not like it was a secret thing, but like it was just not really brought to the forefront. So I think, um, if you know, as it relates to like people taking too much risk, and you know, maybe not understanding what that can mean. being like more proactive about explaining all those rules and kind of like on one hand, the whole point of like perps is to give customers leverage, right? I mean, that's the whole point of it. But you want to be a bit more, you want to explain a bit more what the risks are, right? And kind of how it all works and how like liquidations can cascade. Like there's probably like the industry can do a better job of like educating, traders on that. And we're definitely happy to be a part of that.
Yeah, thank you for that. And so there was I wasn't trading on Lighter or following it like super close, you guys specifically, but there was all this drama like in sort of the wake of Friday that like Lighter is down and people can't trade on it and their positions are stuck. What exactly, like, can you clarify exactly what happened tech wise with Lighter during all this?
Right. So, and this is an important point. I want to be clear about what happened, and I don't want it to sound like we're making excuses because any kind of outage, any kind of system degradation is a problem for customers. So, I want to make that clear, right? But yeah, I think that being said, I think if you just zoom out, like folks kind of conflated, oh, there was like this market crash and we had an outage. Like the reality is that the outage happened 5 hours after the market crash. So
Got it.
actually, during the market crash, the system worked exactly as it was supposed to work. We have 250,000 traders. Like, did a handful have some glitches? Sure, but that happens. But like for 99.99% of the traders, the system worked exactly as it was supposed to during the actual flash crash and hours before after that. Where the system gave out and had an outage was 5 hours later, actually during a pretty quiet time in the markets. The other thing that happened was this is what I alluded to before, where we saw even before the crash, there was like very high TPS in general, and so later was functional, but performance was a bit degraded. It was kind of glitchy for a couple hours, like before the crash, and so you know we basically that's it, right? So we when we did the post-mortem, it's like those two things shouldn't have happened, right? We should have upgraded our infrastructure sooner so that neither of those would have happened, neither the degradation before nor like the outage 5 hours later. Um, but neither of those resulted in the kind of losses that you know would have happened during the actual flash crash had there been an outage then.
So why was there an
So
outage after? Like, what happened?
because what happened was we were like our plan was to upgrade the database um over the weekend, right? Which kind of seems reasonable, right? Like you want to upgrade during a quiet time, like Saturday to Sunday, because we had just launched before we're running in private beta mainnet for 8 months, and then we had just launched public mainnet week before, and so we were anticipating, okay, there are going to be a lot more new customers. Like we should upgrade the infra, and we had a planned infra upgrade Saturday night. So it was 18 hours before that, or sorry, 36 hours before that, this flash crash happened, right? And so with the old database was still there at the time, and it survived the crash, but then eventually it just gave way, after 5 hours, like the database just got into like a bad state. I mean, I guess you'd have to talk to like, you know, I mean, the databases are kind of a whole nother beast. Exactly why databases, would give out kind of after a period of severe stress. There's a lot of kind of very technical details there, but that's what happened. At the end of the day, all of this could have been avoided had we just done the upgrade, Thursday night and just taken the hit of a 10-minute outage then.
Makes sense. Okay, thank you for that. So I want to ask you. You mentioned LLP. Can you talk a little bit about like how LLP is different from HLP, and why did LLP take a hit?
Right, right. So I think at a high level, there's probably the more similarities than differences. The differences came into view in particular, you know, this past week. Um, I think actually like LLP, if you zoom out, it's had very strong performance. It's up, I think like 221% year to date, with a Sharpe ratio of 5.5. It's had drawdowns before, right? Like when during those volatile periods in February and April, if you're up high double digits or triple digits. Like it's reasonable to have drawdowns in the mid single digits. It's had drawdowns of like 5, 6, 7% before. It was down 5% um, on Friday. I guess now the question is, why did in this like volatile day, you would think because it collects liquidation fees, it should have made a lot of money, right?
Uh-huh.
And other similar vehicles like HLP did make a lot of money, and so um, so that is the question, right? And I think um, another way of looking at it though, right, is like that's like perps are a zero sum game, right? So if you look at the total P&L of the day of all the participants, it's zero. So then you have like kind of traders on the platform, plus um, like other market makers, plus let's call it bad actors, right? The kind of folks who might be doing manipulation or like again like the jelly type thing,
Yeah.
plus LLP, right? The sum of all of that is zero. Now we ruled out the bad actors, so that those were not a factor Friday. Most of the other market makers kind of left once they saw
Uh-huh.
extreme volatility. They just kind of bounced. So then what that means is, right, like the 20 million that LLP lost, that's positive 20 million P&L for all of our traders. So, you know, so I think it's like, is that a bad outcome? I mean, actually, LLP, the holders of LLP they had 15 up days in a row before that. You know, they if the ones who got in early in the year were up triple digit percent, the ones who got in like in April, May were up high double digits. So it's like we think it's the right trade-off. And then now exactly why did it happen that way? Because LLP is more, you know, less aggressive about how it applies the ADL logic, um, and so it kind of favors the trader a bit more than favoring the liquidity provider. Now it does charge a higher liquidation fee, so there's a like I think a month ago we were getting some criticism for like, well, why is our liquidation fee so high, 1%? Which I think for like most of the time in the industry that was the standard. I think it started coming down on other platforms, and but the trade-off is like that having that higher liquidation fee means you have like more funds in reserve when things get really bad. It's like, if things are pretty bad, you get liquidated, you pay the 1%, but then things get really bad, you're protected from the ADL for longer. Now eventually, like markets were down another, like if I don't know, if Bitcoin had gone all the way down to 60K, like we would have had the ADL sue, It's not like we don't have it. It was just like less aggressive.
Got it. Going back really quick, just because I'm interested in like the founder, like wartime shit. When you thought LLP was under attack,
Right.
for the first hour, like what do you do? How do you identify that? Like, is it like a all hands, like whole team gets on? Like what you
Yes.
like give some like
Yes.
wartime speech? Like what happened?
Well, we had gone through it before in like yeah, it was like March 16th. We still remember it well. And at that point we had only been live for less than 2 months, and like and so there was an actual attack at that point. And what happened then is that we were like very enthusiastic about listing new coins, listing new markets. We listed a bunch of new markets, and like LLP provided a lot of liquidity. Actually, I was providing more liquidity than in the spot markets on Binance. And so someone was like manipulating the spot markets and profiting from the futures on lighter. And this is what happened in March, right? And so within like 20 minutes or something, they made 500K, which at the time was a lot, right? Because
Uh,
I mean, the whole LLP, I think the TVL in there was like, I think like 5 million, right? So it was like a 10% hit, but we made everyone whole because that we should have known better. Like we shouldn't have provided that much liquidity to these new markets. So anyway, so we were looking at like, okay, where are we losing? Like, okay, like there's some weird stuff going on in Solana. There's some weird stuff going on in BTC. Like, is there any one participant that's profiting in an irregular way? Like, are there any patterns around that? Like, we've kind of like some of the analysis we did back in March, we were ready to do again. And so yeah, it was all hands on deck, um, for sure. And then once we concluded that there was no attack, then we switched from that to making sure that the system stays up. Now, like I said, 5 hours later, it didn't stay up, but for a while it did, and we were just like um, kind of addressing, a lot of customers were still like during this crazy, it's like fog of war, right? Like,
Uh-huh.
it's like, you know, like we had a lot less liquidations than other platforms, but out of 200,000 traders, that's still a lot of liquidations, even if it's
Yeah.
fewer number, right? So we were just kind of like, I think after we identified that there was no attack, what the team spent most of our time on was like addressing customer tickets, because somebody got liquidated, like they still want to know, was this actually like they're not thinking about it like, oh, if I was trading another exchange, it would have been even worse. Like they're still thinking, hey, like I got liquidated, can you guys check that this happened correctly, that this was that this liquidation was fair. Like, so we were just digging in. Now, even maybe we only had like maybe we only had like 1,000 liquidations instead of 5,000, but that's still a lot of liquidations
Yeah.
to
Yeah.
track. And so we were focusing on that, and then 5 hours later, again, our team is distributed, so by then it was like 10 p.m. for the US folks, it was like 3 a.m. for the European folks. We had this outage, and so everyone was kind of working for 4 hours straight to bring the system back up.
Sounds like a movie. In the
Yeah,
background.
so it's like kind of three phases, right? First, we thought um, it's like, okay, we're good. There's no attack. We're good. Okay, now, okay, we've finished all these um, customer tickets. And then like we take another hit through the outage. So it's just like, yeah, kind of like we think we're golden, then we're not. Now, okay, we fixed it. We're good.
Yeah, thank you for that. Okay, we have like 10 minutes before I'm unleashing Robert Chang on you. So I want to get into a couple more things. I think over the last couple months prior to what happened on Friday, the just like the narrative of perps has gotten really hot for the on-chain crowd. A lot of the meme coin guys have started trading perps. Like all anyone is talking about is hyperliquid, lighter points, things like this. Why in hyperliquid on the DEX side is obviously dominant force right now. Like why would somebody moving forward trade on lighter versus other options such as HL?
Sure. I mean, I think our value prop has been the same when we started building 3 years ago as it is now. Which I think people don't necessarily know that, right? Like, so we started working on lighter kind of late 2022. In fact, when we first started working on it, that was FTX was still around, right? So it was like right around this time of year, like October 22. And I mean, the thesis was always like, let's build an exchange that has all the security and the verifiability that you can get from, from blockchain, but is also as user friendly and as fast and as cheap, or if not better, than centralized exchanges. So that was always the thesis, and that's the value prop today, right? So it's cheaper. I mean, if you're a retail trader, it's zero fees. If you're not a retail trader, you're an algorithmic API trader, it's still lower fees than competitors. It's faster. Like I think a lot of people have done measurements where like you can tell it's like a few hundred milliseconds faster, which really makes a difference um, for both. If you're using the front end or if you're using the API. It's backed by Ethereum security. Like with the the exchanges that are running their own L1, well, if that L1 goes down, like if they had an outage, that's it, right? Like you can't get your assets out. Like if on the other hand, if later, let's say hypothetically this outage lasted longer and we couldn't fix it, well, everyone could then use the escape hatch and get all their assets out from Ethereum. And so there's that Ethereum security, and then last but not least is like the verifiability piece. So again, everything happens, all the matches, all the liquidations. There's a cryptographic proof. So we stand by every single order that's matched, every single liquidation that happens. Like, and that's what we were doing during that time that I was talking about. Like with the customer tickets, they're asking, "Oh, why was I liquidated?" We could explain exactly why and kind of show the proof. So anyway, so those are the value props. Um, I think they have, if you look at kind of our growth, I think they have been resonating with at least some customers, and we're always open for feedback and you know new feature requests and all that. Like the team is kind of ready to build more.
Sort of follow up there. I have a question from Gort. I'll just like read his exact question.
Sure.
Can you ask to distinguish between payment for order flow and what Lighter is doing by charging API access? And then to follow
Right.
up his thoughts on what he thinks Lighter could charge long run virtual versus what HFTs will charge in TradFi for payment of order flow.
Right. Yeah, I mean, I think again, this is like, there's not like low information actors on X, right? Where like, because when we talk about like Robinhood model, the point of that isn't, it's not like literally Robinhood like payment for order flow. It just means that like the kind of bigger picture that free for retail, charge professional traders, right? Professional institutions. That's where the analogy ends. It's not like literal payment for order flow. And
Mhm.
first of all, with Lighter, it's on chain, so like there's no like side deals with anybody. Like if you're, it doesn't matter if you're, if you're the biggest market maker in the world or like two guys in the basement in France, like the same, running HFT strategies, like same fee structure, right? And it's transparent, it's on chain. So like there's no, it's not like, and I don't, we're big fans of Robinhood, and we like, I think a lot of the criticism they've gotten has been unfounded. But even if you believe that, none of that applies here, right? Because it's all on chain, it's all transparent. It's the same fee structure for everybody.
That was sick. Shout out to Court, low info actor. Thank you for that, Mr. Vlad. I mean, if you're down, let's get I think that's most of what I had. I mean, we could go for an hour, but I said fuck it. Let's let Chang in here. What do you think?
Sure, let's do it.
Okay, so we have Chang's gonna join. I don't really know what he has for you, but I'm gonna moderate. We'll keep it PG, and then I think after him, Marty is gonna join at some point. Let me get the overlay right. Mr. Chang, what's up? Hell yeah.
Yo, what's up?
What's up, man? How are
Good
you?
morning, good morning.
Welcome,
Good, good.
Mr. Robert Chang, friend of the
Hey,
stream.
Vlad.
I don't think you really need to give an intro, but you can if you want.
Yeah, yeah, there's no intro. Yeah, I guess we just like start or
Yeah, sick. So I don't really have much prepared for you, so I'll just sort of like play the middle here. If it gets hot, but Chang, you can
yeah.
kind of just start, and then we could go back and forth between you and Vlad. But I appreciate you, you stepping up to the plate and suggesting that we do this. I'm excited.
Yeah, yeah. Yeah, I'm just like I think one of like my largest questions here really is for Vlad, it's not really something against lighter, but like why do you think like the Hyperliquid team allowing that like short from that one wallet to become like 25% of like the entire OI on BDC. Do you think that was like the main problem that kind of like caused everything? And if so, like yeah, what are your thoughts on that? And how can something like this be prevented in the future? Because a really large wallet could just always repeat the same strategy, right?
Um, yeah, I mean, I guess that's like as far as their rule. I mean, that's more a question for Jeff. But like like I've said before, like open interest, like people talk about how like too high ratio of volume to open interest is unhealthy. Like too high ratio of open interest to volume is also unhealthy, right? Like if you have a system that where there's like tens of billions of open interest and not much liquidity to absorb that open interest when those people want to get out, like that's not healthy either. So I think at the end of the day, you just need to grow both sides of like the marketplace. Like it's a flywheel. It's like you get the whales, you get the small fish, then you get the smaller sharks, then you get bigger fish, then you get the bigger sharks, then you get the whales, and you get even bigger. You need to grow the ecosystem like that. You can't just say like, oh, like we just have like a couple of small market makers and you know liquidity provider of last resort, and let's get like the biggest whales in the world in there. Like that they can that can be unhealthy for the system. So I think that's kind of what I have to say about that.
I see. I see. Do you think like um I guess like this whole like decentralized perps thing, like people kind of like pretend Hyperliquid is decentralized, but in your opinion, like on the spectrum, like how decentralized is Hyperliquid compared to Lighter? Um, do you think that like yeah, do you think this is like a problem in the future? And obviously there's trade-offs, but it kind of feels like, you know, Jeff is the reason why Hyperliquid is Hyperliquid, right? And Yeah, like everyone's like fighting lighter because it didn't, it didn't work for a while. But yeah, I think this is like kind of a problem where like, an exchange pretends to be decentralized. I don't think it's very decentralized, but yeah, what are your thoughts there?
Um, well, I mean, I think again like you're talking about the outage, that was a big problem. But again, I just I think people should be aware like that happened 5 hours after the flash crash. Like it was kind of just you know technical maintenance that should have been done earlier that has been done later. But anyway, I mean, I think to your broader point, decentralization, how it applies to other platforms, like I mean, we actually started building before Hyperliquid, right? Like I said, we started building around this time of year 22, and we were aware, like we knew about like chameleon trading and like like kind of the backstory there. And I mean, I think they've overall, I mean, like they've done a great job, right? Like I think given the architecture choices they made, it's worked very, very well. I mean, like the choice of L1 instead of Ethereum L2, like that's not the choice we made. I mean, we thought about it too, right? Like I remember actually like when we were first debating what we should build and how, like we had this long meeting in July 22. And one of our engineering leads was like, "Hey guys, like why don't we just use like Cosmos? Like forget the whole like all this Ethereum stuff. Like let's just use Cosmos." And and we like the others on the team had a pretty strong view that no, like we really like building on Ethereum and inheriting Ethereum security and composability, like that's gonna be important. So anyway, I mean, but had we gone the other way, we would probably would have had a similar stack to like DUIDX v4 or Hyperliquid, which kind of both started out with a Cosmos um, chain. So there are trade-offs there, right? Like um, you can like I actually think that from a like we have, like I mentioned, like Ethereum security, we have verifiability, um, low latency, low cost. The verifiability part, like the L1 architecture has that as well, so that's not necessarily like I think the other guys who tried to build on Ethereum don't have that part. But like the part that we did that's unique is we actually have the verifiability part and it's on top of Ethereum, right? Like now the security part is very important, like, but we also gain composability, right? So we can have stuff where there's something like 150 billion, maybe now less after the crash, maybe 120 billion of like assets on top of Ethereum. Like all of those could be used as collateral on Lighter. And whereas like if you build your own L1, like what you have to do then is kind of rebuild that ecosystem on your L1. And I think they've done a great job at that, right? They have like 8 billion TVL or whatnot. Like, that's great. I mean, 8 is still a lot less than 150 or 120. Yeah, I mean, I guess that's some thoughts. There are trade-offs here. Like I think on the latency part, I think Vitalik made a point that like the more secure the L1, the more performant the L2 on top of it can be, right? And I think for us, like the latency is faster. Like I think most people who've tried Lighter and have tried other products like can feel that. But I guess the downsides of our architecture, like it is, you know, like if for somebody who cares about kind of like sovereignty or like it's like it is there's a centralized sequencer. I mean, the sequencer has to play by the rules. Like that's what the whole ZK architecture ensures. Like if the sequencer messes up or gets corrupt or gets hacked, it can't you know post its proof to Ethereum, and then no money can change hands between the L1 and the L2. So that's certainly there. But I think you could argue, well, you're still relying like on a centralized sequencer. Like I think philosophically some people might not like that. So there's some downsides to our architecture too, but we think the priorities that we care about, which is low cost, low latency, verifiability, security, composability, like we do pretty well across all of those counts.
Like, why do you think composability is important? Like, are there any examples of like when composability actually has made sense?
Well, I think, for example, like let's say that if you have like a spot and perps and they share sequencer, you can actually do stuff like basis trading atomically, right? Like that's composability. Like here's another example. Like let's say you have these pools like LLP or other pools, you can actually tokenize those, and they can actually live as ERC20 tokens on Ethereum. So you can actually like someone can like borrow on Aave and like hold LLP without even going into lighter, right? So that's like pretty cool, right? So there's a lot of stuff you can do with like you can essentially run like on-chain finance in much more interesting ways when you have composability.
Yeah, I agree, but don't you think like the downside there is like, you know, Ethereum kind of like it didn't really perform well under stress on that day, right? So why like what is there to basically give users the assurance that Ethereum is not gonna perform terribly again, right? Like it just seems like
Wait, are you talking about just like high gas fees, or what
yeah,
are you
gas
trying to say
fees,
there?
mainly gas fees, but like I think that is like being an L2 on Ethereum, there are like those kind of downsides, right? Like
Well, I think the only, I mean, the gas fees, it is a, uh, it's supply and demand, right? Like like if you have, I mean, that's why you have stuff like insurance funds and like, I mean, you kind of like if you have an like on-chain strategy, you would kind of factor that in. But I mean, I think Ethereum did, I mean, like the high gas fees is part of how it's supposed to work. Like I think it didn't have an outage. Like it actually I
yeah,
think compared
cool.
to a lot of like I think Ethereum like has the I think the last time I had an outage was like 2015, right? So like 10 years of stable performance. So I mean I think it's overall very robust. Now yeah, like the gas fees, you can actually do like financial engineering around that, right? And have like insurance pools that pay for when that happens. And like I actually think that that's like a strength, not a weakness, because it's all composable. Like what gas fees on a different L1 that have that has less history, like you can't really underwrite that. Like that's actually I think like I think it's better to do that on Ethereum, which has many years of history, and you can kind of underwrite those risks.
I see. Um, yeah, I guess like I guess do you guys like moving forward, you guys will continue to kind of like take this stance of being a layer two on Ethereum, and it's not something that you would diverge from. Like it's just because the main thing here I'm wondering about is like um so people want to trade on lighter, right? But they they want to own Hyperliquid the token, right? Because if you own a Hyperliquid token, you make money from people getting destroyed, HLP prints, right? And then but if you touch like I guess LLP, which some people kind of like think is like an insurance thing now, why like people just continuously like trade on lighter, but once you launch the token or something like that, not saying there will be one, but I'm just saying like once you do launch token, like
Mhm.
what's the growth story for the users to hold it, right? If there's no yeah, like I'm not saying Hyperliquid is a
Yeah, I mean,
better
I think that's just like kind of like I mean I don't know like I think what really matters is like creating value for customers, right? And creating value for token holders as well. But this whole thing of like, I don't know, I think there's this, people talk about this like L1 premium. I think the concept is pretty dumb, right? It's probably some VC said something at a cocktail party 3 years ago and everyone picked up, and like the concept has no merit. It's like if you're creating customer value, you have a good token. If you're not, you don't. Like that to me very simple.
yeah. Okay. But the thing is like VCs also created like the L2 premium narrative as well, right? Like without VC
Yeah, and
like
whoever said that was wrong too. I mean, I just think that it's just like that's like those are not games that are interesting to us, right? We don't care about like the meta. It's like creating value. You build like the question is first principles. What's the best architecture for the customer? And you build that and create value for different parts of the marketplace, whether it's traders, whether it's I mean, like LOP is, stronger Sharpe ratio and better performance than anything else out there. So I think, that's good. And token holders will accrue, value will accrue to them as well. I mean, it's like every constituency will do very well as long as the system is creating value across the board and growing. And the best way to grow is to create value for customers, have like efficient tech, good community, and kind of keep iterating fast. Like the choice of architecture should be based on what's creating value for customers, not on what like someone who's pontificating about meta like said online.
Right. Dude, so the thing with LLP is, the description on the website says that it will run like market making strategies and handle liquidations. Are you guys going to reword that to basically, let LLP depositors understand that like it's kind of like an insurance layer, or
well, it's doing both, right? I mean, I think that description is not wrong, right? I think what we need to explain further is what exactly does that mean? Like, what does it mean to handle liquidations, right? Like that liquidations, there's like partial liquidations, there's full liquidations, there's ADL, like what those risks are, like what happens when the market's like let's say Bitcoin did go all the way from 120K to 60K, like what would happen? Like I think just like breaking it all down, and yeah, I mean theoretically there is the risk of total loss, right? Like that's like, again, I'm talking about moves that have never happened in history, but theoretically that can happen, and we should just explain those risks more. I mean that's true for anybody, right? Like if you buy BTC spot, I mean that has a risk of total loss also, right? But like, I think it's not like, I think what's in the docs now is not wrong. It's just kind of it's not thorough enough in explaining all the different scenarios.
Right. I mean, like it is kind of like just based off the way like it was handled, right? It's kind of like, you could say it's kind of like a deceptive to the first set of participants that did experience that event, but
yeah, I mean, again, I don't know if deceptive is the word I would choose, but it's there wasn't enough clarity about how it works, and that's why we did compensate LLP holders somewhat, because while
yeah.
the system did what it was supposed to do, there are enough people who bought into it beforehand. Like, especially, like, I think there was a lot of, like, frenzy in the markets, and people say, LLP had 15 up days in a row before that. There were probably folks who got in who didn't know much about what they're getting into, and we feel bad for those people, and we did compensate them somewhat, even though the system did what it was supposed to do.
Yeah.
And again, if they keep holding, our expectation is that it'll continue to be, sharp ratio of 5+ and with a good APR. And I mean, for what it's worth, the last 3 days were up again, right? So it's like, it was up 15 days in a row before that, and up the next 3. So, if this event is a once in 10-year thing, then, you can do the math on that.
Yeah. Another question, maybe just like on the liquidation engine side, like, did like in the future, like how would the liquidation engine become like more performant, or like why did it seem like it was really slow on that day?
Well, again, the slowness had nothing to do with the like I mentioned, there was degraded performance for a couple hours, and then later on kind of database issue. So I mean, that was more just like an infrastructure like scaling issue, which we like kind of grew too quickly and that didn't upgrade the infrastructure soon enough. Again, not a good thing. We take responsibility, but there's nothing to do with the liquidation logic. And just as a point of fact, right, like we've had very volatile markets before. We had them in February, we had them in April, we had them in July, and the liquidation engine worked very well through all of that. And we've done millions of liquidations, and there's a cryptographic proof of every single one is being cracked.
I see. Yeah, okay. I mean, thanks for answering all the questions like that. I don't really have anything else, but I just want to
Great
like
questions. Thanks for coming up.
I do want to like ask like if Hyperliquid, they're doing like trade XYZ, they're giving users like this other like growth story, right? Like people can trade tokenized equities, or not tokenized, but like they can trade equities and commodities. Like is this something that's going to be possible
Yeah.
on Lighter as well? Like
Yeah. No, we're very looking at real world assets very closely as well. Yes.
Okay.
Stay tuned for that. We'll have something on that in the coming weeks.
Okay. And do you think there are like, legal regulatory risks to letting users get exposure to these assets without KYCing? Like, what's your thoughts there?
These assets meaning what, the digital assets or like stocks?
Stocks.
That's a good question. I think it depends on whether it's spot or perps, and yeah, we have a couple of advisors, and this is where, like, I think again back to the narrative thing. There's like people who say like, oh, like, why do you guys have VCs? Well, these are the kinds of questions that the VCs we have are really helpful with. Right now, they get out of our way when we're just building product, but for these kinds of questions, this is the kind of stuff that, understanding, like, okay, like, is when we're talking about, SEC looks at stocks, but then stock futures is CFTC, and how are they thinking about DeFi, and how, like, now if it's a stock future, is that actually like regulated by both SEC and CFTC? Like, there are a lot of nuances there, and we're working through those, like, before, listing those assets.
I see. Yeah, really excited to hear about what's coming next. I think you handled everything like really well. Yeah, I think like generally everyone on crypto Twitter right now is like a huge fan of yours. So yeah, thank you. Thanks.
Oh, I
don't know if
appreciate that.
yeah. I don't know if we're bringing Marty up, ThreadGuy, or
Yeah, we're bringing Marty up. Chang, this is lit, bro.
Yeah,
I'm excited
and,
for the your tweet rant to follow this. But thanks for coming on, dude.
And by the way, I do have some stuff to get to in about like 10-15 minutes. So just
All right, we'll bring him on right now. We'll rip it right now. Chang, you're the truth, bro. Thanks for coming on, dude.
peace.
All right, bro. All right, we'll get him right now, Vlad. We'll cap him at like 10-15 minutes.
Okay, cool.
How'd you think that was? It was fun. I enjoyed it.
Well, I mean, I was surprised. I mean, I thought, I mean, some of the tough questions were not so much about us, but about our competitors. So that was interesting.
What's up, Marty? Let me just save his image
up?
real quick because your PFPs.
I got +1 Vlad there. Vlad.
+1 Vlad?
Hey. That one good.
Yeah. All right, cool. Let me get back in here. And awesome. Marty, welcome. It's good to have you on here. I think you just listened to the Chang one, so yeah, you can kind of just rip if you want to get into some stuff, and we can kind of go from there. Thanks for coming on.
Yeah. Thanks for having me. Appreciate everybody making the time, and just want to make it clear, like, I'm not a hater. I'm not a slider to zero, but as a user, as somebody who's gone through the API docs, just kind of want to share our initial experience. I think Friday was essentially fucked for everybody. Some exchanges were worse than others. A little bit of backstory. I think, Vlad, we've been in some chats before. I mean, we've been talking with the Lighter team since January. We were looking to start doing API in April, May, when it had come out. In January, it wasn't available. And then as soon as we launched the API, we launched the pool. We got some pushback initially from the team, which I think that's the main problem I have with the Lighter team, is in their communication. It's not necessarily a question or to get any pushback, but things that seem fairly simple, either we get like multiple responses from. Like, we were initially asking if we can do an API on a pool, and somebody said yes, somebody said no. People in the Gen 1 chat said they were already doing it. I guess my main issue there is that there's no API docs, and that we're getting mixed answers from the team. I don't
Sorry,
think
and
there is
that was
any
the state
API
of things
docs.
a few months ago, or now?
Last week, like 2 weeks ago.
Well, we have, like, when we did the public mainnet launch, I guess exactly 2 weeks ago, October 1st, the API docs were updated and published on the main website. There might be still gaps there, but they were definitely kind of revamped quite a bit. So did you see those revamped API docs, or are you talking about the ones from months ago?
Yeah, we were able to go through it, and I think some users even today have issues. If you go in that Gen 1 chat, the pools chat, there were some other issues trying to just simply get an API up on the pools. But that was our initial reaction. Was somebody was
What
like,
do you
"Yeah,
mean by
hell yeah, you
API
can
on
do
the
it."
pools? You mean like for running a custom pool
Yeah.
with an API?
Yep.
Okay. Yeah, that I mean, to be fair, that's kind of a pretty new concept for us. Like, I think the idea initially was we have LLP, and then it was like, let's do some like kind of copy trading type stuff for some of our star traders who've had very nice track records, but those are like discretionary retail type traders. And then I think the idea of doing pools for programmatic traders, that's almost like kind of like running a on-chain quant hedge fund, which I mean, I'm excited about that idea actually. Like, having done TradFi before, like I think that's really cool, like democratizing finance. But so like I think philosophically we're on the same page about something like that um, needs to exist, and it'll be really cool if it's prevalent on Lighter. But I think practically speaking, we've just gotten into that, right? Like we finished onboarding about 600 API traders in the months starting from I guess like, well, you were one of the first to look into the API, but like I think between April and September we onboarded about 600 API traders, or small HFT shops and some not so small, and we're only now starting to think about like how to do that in the context of the pool. So maybe just bear with us a little bit. Like that's just kind of like a new. It's like the intersection of custom pools and API trading that's only become a priority for the team, I would say, for like a couple of weeks so far.
Yeah, no, I'm all good. Everybody's in the testing phase. I think the main issue is nobody is on the same page. So we have the public Gen 1 chat, we have a API chat, and then we have another general chat with you guys. And somebody says you can, somebody says you can't, then two minutes later says, yeah, you can do it, but it's not advised. And it's like, come on, let's just simply all get on the same page. Like, can we do it or can we not? And then we ended up just fixing it ourselves and making an API key on the pool, and lo and behold, it worked, right? So it's like,
Right. I mean, I think
I'm not
it
sure why
works. I
why it
think
just wasn't.
the ambiguity wasn't that, and I'll dig into the details. I mean, I think you're probably talking about how there's like some communication on Discord, some on Telegram, and
I'm only Telegram. I'm
only
Discord
Telegram.
retarded. Like, yeah,
Okay.
you're lucky that ThreadGuy, like, I had to create a
Yes,
Discord for this.
sir.
Like, yeah, that was the other thing. Like, the
Right.
team is like,
'Cause,
oh, you
yeah.
have a bug reported on Discord. I'm like, well, I don't have any admin or I don't have access. I have to wait, 2 hours to
Right.
go through the bot. And I'm like, should be an easier way
Yeah.
for users to communicate to the team a bug. Um, I
Right.
put it in a few Telegram chats, and somebody was like, "Put it in Discord." I'm like, "You want to hear it, or you don't want to hear it?" Like, I'm not going to Discord. I think
Right.
that's just like my main overall issue with
Yeah.
it's
Yeah.
just
Yeah.
team communication and everybody being on the same page. If they're like, "Hey, no, you can't do API trading on a pool. You can't even create an API key. It's not available on the front end. It's not available in the docs." Sure, but we could create an API key. Somebody said we
Right.
could. Somebody said we
Yeah. Yeah.
couldn't.
Yeah. I mean, I
Yeah,
think
it's a little flip flop, ping pongy.
yeah. Yeah. I think kind of zooming out, right? There's definitely a lot of like, I mean, I think the team, like I mentioned, like, there's a lot of um, work that they've gone through, kind of onboarding lots of different market makers and API traders. I think there's some groups that where the communications slipped through the cracks. So we apologize for that. I mean, I think just on the substance of it, though, like I think the reason why there's lack of clarity about the specific point is not it's not so much that it's not technically possible, right? It's more just that from like a user um, risk management point of view, right? Like if we like it's one thing to get folks like to show public pools that are managed by like a discretionary trader who's trading like a couple times a day. Like there's not that much like if that person goes rogue because they're only allowed to trade on Lighter, right? They can't take the assets out. But like if they're trading with low frequency, there's not that much like let's say that trader is like not a good actor. Well, there's not that much damage they can really do if they're just pushing buttons to buy or sell a few times a day. But like API traders could, you could like write a system that um is harmful to participants in the pool. So I think it's not about like whether you can create an API key or not. It's more just to kind of make sure that whoever is participating in that there's like guardrails in place, and we don't want to show pools at the top that might be seen as risky. So anyway, that's just a little bit of context, but
Oh, that's a
to
better
your point
answer
about the
than
communication,
yes, no, maybe so. That like if you would have just said that, not you specifically, but the team, like, hey, we're trying to fish out bad actors. We don't want to push API to retail people that are depositing, for safeguarding. Okay, yeah, sure,
right,
no problem. But I think it
right,
was just the
yeah,
lack of clarity. I think
right,
that's my
right. Well,
overall issue
fair enough.
with the
Yeah,
lighter
yeah.
team is the lack of transparency and communication.
Yeah, I mean the team, the customer support team is really focused on the retail trader, like the API, because a lot of the API traders actually kind of onboarded without any help from us. But we, again, for context, like we have two people whose part-time, who are spending part of their time onboarding API traders. And we've had like 600 groups that we onboarded 6 months. So some fell through the cracks. We do apologize for that, but hopefully this clarifies things a bit.
So like
Yeah, for sure.
the best customer support call of all time.
Yeah, that's why I called in today. Was just like it was like a 1-800 number. It wasn't to say
Right.
lighters going to zero, right? And the other thing with the pool is if it is a bad actor, they do have to hold X amount of the supply in the pool, so they're also losing their own money, right? They could make money somewhere else if they were able to be a negative actor, but they're also burning their own money too. I think that's another thing that I could bring up is we froze our pool due to like a loss
Mhm.
on PAX G when it wicked to 3,500. We were able to withdraw all of the creator funds, but we were still able to trade on the pool with 0% ownership. But if you look on the mobile, the pool, it doesn't show. But if you look on the UI, the pool still shows. Just like odd, right? If the
Right.
pool's frozen, it shouldn't be able to trade. And I'm able to trade and have
Yeah, which
0%
one is yours?
ownership.
What's the name of the pool?
I think it's called up down.
Up down. Um,
It's down like 85% on a liquidation on PAX
w-
G. Fun times.
right. Yeah, I mean, I think
Just
to
simple
be
things,
fair,
right? Like,
we actually haven't officially released, like we've if you look at our announcements, we actually, like, the user public pools have been kind of like a like an Easter egg. We actually haven't announced them yet. Uh, so this stuff is very much experimental, but again, we if there's kind of a lack of communication, we'll do better on that.
yeah, like if a pool's frozen, it should just be withdrawal only. That seems simple.
Yeah, makes sense. Cool. Well, I do
If
have
I
to
can't
jump,
if
but
I can't turn the if I
yeah,
can't turn the pool back on, then what's the point, right? I can still
yeah.
trade it and
We'll
have
follow
zero
up.
percent
Yeah,
ownership.
yeah. I think, yeah. I guess we're getting a bit into the weeds, but yeah, we'll follow up with you on the details of that. I'm sure we'll be able to work
Awesome.
out that specific issue here. But yeah, thanks so much for
Of
having me. I
course.
do have to jump.
Vlad, it
Thank you,
was a
Vlad.
pleasure. Marty,
Appreciate it.
thank you as well. I think yeah, 1-800 lighter is a decent number, but no, in all seriousness,
Yeah.
thanks for coming on. Vlad, it was a fucking pleasure. Thank you for ripping two debates, and have a great rest of your day, both you guys.
All right. Thanks so
Thanks,
much.
fellas.
All right,
Bye-bye.
peace.